So hello guys, let's see some examples for the liquidity sweeps. As you can see, price was moving in a downtrend here, creating series of higher highs and lower lows and lower highs. So here's our high point, here's a low point, high, lower low, lower high, lower low. And this supply zone caused the last break of structure. This supply zone broke the last low point here with inefficient movement. And after the inefficient movement and the break of structure, it came for a pullback, but couldn't tap into this supply zone. So can you just remember the example that I drew for you? That was a long example, but I will just draw the short example. So just bear with me. So this was the example. Price created a breakout structure here with inefficient movement and came for a pullback, but couldn't tap into the zone. Instead of tapping into the zone, it created liquidity here. Okay, after this, price broke structure to the downside again. And you could mark another supply zone here. But as I said in the explanation video, you can't open a trade on this supply zone because you have a really great chance to become part of the liquidity, because this part of the this zone will be part of the liquidity, because that could be the third top or the third bottom. So if you open a trade here, you could be in profit. Price could do a pullback, but after this, price will sweep all of this liquidity line and tap into the original supply zone that created a liquidity. So this is the perfect textbook example for this, because as you can see, price created a breakout structure here. After it came for a pullback, created liquidity just like on the example. It created a breakout structure to the downside again. You can't open a trade because you will be part of the liquidity. So let's see what happens after. I will just play price forward. As you can see, price created another tap here. So all of these taps are just part of the liquidity of this supply zone that created the original breakout structure to the downside. Okay, so price has a real great chance to sweep all of these taps and tap into this supply zone. And after the tap of this supply zone, it can reverse the price and create a new low again. Let's see. It actually created a breakout structure to the downside again and created another tap, as you can see. So more liquidity are sitting on this line. So here's another breakout structure. You also can't open a trade here because you want to wait for this supply to be tapped, because you don't want to be part of the liquidity. Okay, let's just play price. After this, as you can see, price swept all of the liquidity from this region. And if you open the trade here on this region after the inefficient push and the breakout structure, it has three criteria, of course, but you have to spot the liquidity. If it's part of the liquidity, you can't open a trade on this region, because as I said, you are happy, you are in profit. Yes, you open the position, small profit, but after this, bam, you will become part of the liquidity. And after price swept the liquidity and tapped into the zone that caused the original breakout structure and build the liquidity up for this zone, price could easily reverse. As you can see, it could reverse. It did a change of character here, and actually this zone created the change of character after the zone tap. So it's a really important part that price tapped the zone. After a zone tap, it created a change of character to the downside. And let's see what happens. As you can see, price built up more liquidity for this zone. We have this tap, we have this tap, so we have double taps. You can't open a trade here because you will become part of the liquidity. As you can see, we have inefficiency here, we have liquidity here, we have change of character here. Price has to fill up this inefficiency, price has to tap this zone, price has to sweep the liquidity. So you can't open a trade here, you want to wait for this zone to be tapped. Let's see what happens. Price built up more liquidity, as you can see. Here's more liquidity on this line. Built up for this zone, more liquidity, so loads of liquidity, loads of orders, loads of stop losses of the retail traders are sitting just above this line, so the orders and the stop losses are here. What will stop the liquidity hand? This zone. If price taps this zone, it can reverse the price and create a new low. Let's see. As you can see, price swept all of that liquidity, swept all of the stop losses, tapped into the zone, and after it has a great chance to reverse. Started to reverse. So as you can see, we had double liquidity sweeps from this region and from this region. So after double liquidity sweeps or just a single liquidity sweep, price has a really great chance to reverse and continue the bearish order flow. As you can see, that's what I was talking about. Price had to sweep enough liquidity in order to continue the overall order flow, which is bearish in this case. So once again, this zone created the original break of structure, built up liquidity on this line for this zone. Of course, price created break of structure here to the downside and inefficient movement, but it didn't build up liquidity here. So this zone is invalid. This zone is part of the liquidity. Price swept all of this liquidity from this region, tapped into a supply zone that caused the original break of structure and built up the liquidity. After this, it reversed, created the change of character to the downside here. After the change of character and the zone tap, it built up more liquidity in this region. After price swept the liquidity from this region again, tapped into the zone that caused the change of character and built up the liquidity. After a zone tap, as you can see, the order flow is continued and a huge movement to the downside came into the market. So this is how you can use liquidity to your advantage. That's why I said the liquidity is the +1 criteria, because it's a really, really strong confirmation. So here, only two criteria happened: break of structure and inefficient move, but price didn't build up liquidity, and this zone built up liquidity. So this zone is more powerful than this zone. So you will wait for the tap of this zone and the liquidity sweep. Okay, let's see the next example. So let's see another example. As you can see, price created inefficient push to the upside from this demand zone. It broke structure, and after the pullback, price couldn't tap into this zone, and instead of tapping into this zone, it built up liquidity here, also here. So all of this region is liquidity for this zone. So just imagine how many retail traders opened positions on this line, on the trend line, or I don't know how they call it, the resistance or support, I don't know. So just imagine how many retail traders open positions here. So all of the stop losses are located below this line. So the stop loss is located somewhere here, and this zone could hold the liquidity sweep. After this, price started to form series of higher highs and higher lows, but with slow movements, as you can see, choppy, wiki behavior, slow movements, small break of structures, small inefficiencies, or even no inefficiency. So this means this is a liquidity trend line. As you can see, we have a trend line here, and price kept touching this trend line over and over again. So retail traders open their positions on the touches of this trend line, even here. So all of their stop losses are located just below this line. So this is a liquidity trend line. We have liquidity here. So sorry, we have liquidity here, we have liquidity here. So price has a really, really great chance to sweep all of this liquidity, all of this void, and tap into this demand zone, because liquidity was built up just for this zone. As you can see, this is the next zone, I mean the last zone before the liquidity build up. So price built up liquidity for this zone, and price has a really, really great chance to sweep all of this liquidity, tap into this zone, and reverse the price to the upside to continue the overall bullish order flow. So as you can see, this is what happened. Price tapped into this zone. After a tap, it immediately reversed and started to form a series of higher highs and higher lows again to continue the overall bullish order flow. So yeah, liquidity is a really, really powerful tool. You really want to master it, because you want to spot the liquidity before you become part of the liquidity. This is a really important golden rule in trading and in liquidity concepts. Always spot the liquidity. Always. See you in the next one, guys.